Hi there, welcome to Nappy Invest and welcome to another technical update video. It is now the 5th of May. Yes, I have to look at my watch. The 5th of May 2024. And I'm going to do the usual thing in today's video, go through the indices, have a look at commodities, Bitcoin, bonds, and then I'll feature 10 individual companies on the ASX whose charts do look interesting for various reasons, not only good reasons, but maybe even bad reasons, including two companies I bought during the week. So stay tuned for that towards the end of this video, or maybe the second half of this video. But let's get back to what happened on the American markets on Friday, their Friday session, overnight Friday into Saturday here. And NASDAQ up 1.99%, almost 2%. Dow Jones up 1.18%. So what caused this excitement in the markets? So let's have a look at a tweet from the Kobayashi letter. That's a fairly popular tweet. Whenever you get 1.7 million views, you're a popular Twitterer or tweeter, whatever you want to call it. So here it is, and this is the whole reason why the Nasdaq rose 2%. Has to do with interest rates or potential of interest rates in the future. So Dow futures, and probably the most important thing about why that is so is not a reason to be positive about the future. Anyway, I'll get into that in a second. So Dow futures saw over 500 points after April jobs data comes in significantly below expectations, which is important. Significantly below expectations. Everything's about expectations, isn't it? Not only did the economy only add 175,000 jobs, but the unemployment rate rose to 3.9%. So all the eyes over the next few months is going to be on unemployment. If it continues to rise, there is a chance the United States will go into a recession. On Wednesday, Fed Chair Powell said a substantial weakening of the labor market could prompt rate cuts. So this is the reason why the Nasdaq rallied 2%. It's all about interest rates. The market right now is overly obsessed with interest rates. So Kobe yesterday goes a little bit further. We now have a weakening labor market, lower GDP growth, and rising inflation, which sounds like stagflation. And then they question, how is this a soft landing? So I think the market was fairly convinced we're going to have a soft landing, but things are looking more likely, not 100% likely, that's not in the cards, but a little bit more likely that potentially we will go into recession. And again, if we do see unemployment rates continue to rise, we will go, or United States will go into recession. That is the one thing they're really focusing on. This committee that determines whether the United States is a recession is raising or rising interest rates. Anyway, so this is the reason why the Nasdaq rose 2%. And I still remember when I bought my house back in 2010, interest rates were about the level they are now. Back then, we didn't care really about interest rates all that much. We knew they could rise, they could drop, but more focused on the economy. Now we're overly obsessed, and this is as a society as a whole, we're overly obsessed with interest rates because the reserve banks around, or central banks around the world, they dropped them way too much, way too far. When you have interest rates down below 1%, that is way too far, and they're back up to normal levels. And this is what happens when they do that sort of thing, that sort of policy of dropping interest rates at too of a lower level. People become obsessed with them. Anyway, so that is why the Nasdaq had a really good day. Should I be complaining? No, I'm not complaining. Of course, I'm not complaining. I had a really good day because I have a fair few holdings in America, and they were up by a significant amount. So why am I complaining? I just think the market is rallying for the wrong reasons. A weakening economy is not the reason to be rallying. Even though dropping or falling interest rates might be beneficial for some companies in the long term, it's actually not beneficial in the short term because there is a reason why the Fed would start dropping interest rates. We're moving into recession or potentially moving into recession, and that's not good for the stock market. Have a look at history. Falling interest rates as we move into recession is not good for stock markets. Anyway, so keep an eye on that in the future, but otherwise, the Nasdaq here is in a beautiful uptrend. A little bit of weakness over the past month or so, but it has sort of rallied over the past 2 weeks. In fact, if we look at the weekly chart, it has rallied last week by 4% and up this week by 1% after dropping 5% the previous week to that. So nothing to be concerned about when you look at the Nasdaq at all. So a pretty good week, and I would expect a pretty good day on Monday, the 6th of May, 2024, for the Australian markets, up about 0.55% on Friday. And if you look at the last 2 weeks, a fair bit of volatility, up and down by a fair bit, but just flat. And so let's have a look at the weekly chart for the XGO. So an okay week, up 0.7% after being flat last week, and after a big down week the previous week to that, 2.84%. And just look at the weekly chart, it's still an upwards channel. No reason to be concerned, sort of in the middle of that channel. So it could go up from here, could go down, and the support level on the downside will be around about 6,700 or so. And if the stock market got to about 8,000, 8,100, that would be looking a little bit toppish, but we're well away from that right now at 7,629. So no concerns right there with the XJO. What about the XSO? An okay week for the XSO, up 1.25%. Nothing to be complaining there. No trend, weekly trend here for the XSO. Let's have a look at the daily chart for the XSO. A very weak uptrend. Why is this not? It should, trading view, it should adjust. Auto, fit status to screen. There we go. I don't know why I always seem to have to click on that when it doesn't adjust, auto adjust. Anyway, so maybe small uptrend. We did have this little bit of a dip. I'd like to see the small ords get above the last high, which was 3,125. That would give me more confidence that the small caps are looking pretty good. But otherwise, it's still in this what do you call it? This trading range. Still in the trading range. It tried to get above the trading range about a month ago or so ago, but still within that trading range. And that's why I'd like to see it get above the old highs to really confirm that we're moving into an uptrend. Russell 2000 should look fairly similar to the small caps here. And it does. It looks fairly similar, don't they? Fairly similar, the XSO and the Russell 2000. So the Russell 2000 is considered a small cap proxy. In fact, it's called the US Small Cap 2000 Index on TradingView. And let's have a look at the Dow Jones. Probably looking a little bit more bullish than the Russell 2000, but maybe a little bit more bearish than the NDQ. And how did this go in the last week? Up, yeah, actually a pretty good week. Up 1.14%, so 2 good weeks in a row for the Dow Jones. And the weekly chart here looks pretty good. No complaints there. And even the daily chart looks okay as well. And maybe okay is the wrong way to put it, because after this little dip, if we keep seeing it go up, that would confirm the Dow Jones is still in an uptrend. And I'd like to see the Dow Jones get above 40,000. That would be a significant level, a round number. And I'm pretty sure if it does get above 40,000, the industrial average, there would be a little bit of chatter in the news about that, because media loves round numbers as well. And what about the Nikkei? How's the Nikkei done? Yeah, it's fairly similar. An okay week. Nikkei up 0.8%. No complaints there. And I suppose I could have a look at the DAX, the FTSE, but I won't. I'm going to keep this hopefully a little bit shorter for now. So that's the indices. Nothing to be concerned with at this point in time. Now onto gold. So gold has been all over the place the last 2 weeks. In fact, 2 down weeks in a row, 2.25% last week and 1.5% this week. And this is understandable because it had a really good rally. And after a really good rally, you would tend to find a little bit of weakness. I would prefer, after a rally like gold has seen, that the price of gold or anything you're covering goes sideways, because when it does go down, that shows me there's a little bit of weakness. But when it goes sideways, it means there's no weakness. There's no selling. So a few down weeks in a row for gold, and it's moving straight into the short-term moving average channel. So hopefully it is right now in a good support level, and I like to see gold start going back up. That's what I want to see now. Gold start going back up. And the last trading day of the week, it was flat. and it was a doji, which means there's indecision, sort of like a fight between the bears and the bulls. The market is uncertain when it comes to gold right now. Interesting enough, Western African Resources last two trading days went up about 3% each day. I'm not sure why the market has rallied for that company, but there's other gold companies. Share price has fallen a fair bit for the last 2 days. So a bit of a I suppose the best way to look at it is just because gold prices and gold companies should be closely related, correlated when it comes to prices, not always the case. Particularly if you look at individual gold companies, some companies might rally, some companies might drop. And I went through all the gold companies charts about 30 minutes ago, and there's quite a few that look weak. There's quite a few that look strong, quite a few that look neutral. And so even though gold has been rallying, not all gold companies have been rallying. And even though gold prices have done nothing last 2 days, a few companies have gone up a significant amount. Some companies have gone down. I might as well show you. So this is West African Resources. Oh, I've got to look at the future. I've got to look at the, here we go. West African Resources. Yeah, so 2 good days in a row, up about 3%, no, 5% on Thursday, and another 3.7% on the Friday. Compare that to, say, Ramelius. Why not Ramelius? And I know this is down the last 2 days, and in fact, it's been down 3 days in a row. 6.7% on Wednesday, flat on Friday or Thursday. In fact, it was up a little bit and down another 2%. So that looks much weaker in the very short term than West African Resources. And what about Bellevue? Bellevue is down a fair bit. I just was looking at Bellevue thinking maybe this is a buy the dip opportunity for Bellevue. In fact, Bellevue fell 3.2% on Friday, completely opposite to Western African Resources. So going on a bit of a tangent here with gold, but it's just interesting that you can position yourself in some gold companies, but then they do weird things. Iron ore, really, really interesting. It's really. I was going to say interesting again. So I am currently about a month and a half behind my what's it called? AusBiz the Core. AusBiz the Core program. So the current episode I'm listening to is from the 19th of March. And I think the episode, the 18th of March, they actually did discuss iron ore. I think Fortescue was the stock of the day on that day. And then I think whoever was hosting that particular episode, whether it was David Koch or one of the other ones, mentioned some research from one of the reporting or financial houses saying their forecast for iron ore was quite bearish, and they were forecasting it to go to as low as $80 within the next few months or something like that. So 18th of March, so that was right in here when iron ore was in a well-defined downtrend, fell all the way down to below $100 and now has rallied back up to 118.25. I don't listen to any people's expectations on prices of any commodities because we just don't know. We just have absolutely no idea. I just look at the chart. The chart tells me all. So it was looking really weak, and now we've had a bounce. Question is this a dead cat bounce? Don't know. But iron ore actually looks much better than it did a month ago. And again, it's all about the individual company. And I have 2 companies here. Both companies I don't own, but I have traded in the past. Fenix, which I did sell because of the weakness in iron ore, has bounced back up to 29 cents. So this looks pretty good. But Mount Gibson is sort of weak, looking pretty weak and doing the opposite. It's not really rising with the iron ore prices. So negative sentiment in Mount Gibson, positive sentiment in Fenix, and you can just see the difference in the share prices and charts for both. And the same thing for even the bigger ones, BHP, and this looks pretty weak. And BHP is at a support level now, by the way. I was going to feature this company in the ASX companies I'll be looking at in today's video because it's at support level right now. But look at the share price dropping a fair bit. And the whole reason it's dropped is because that proposed acquisition of Anglo American. But then you compare that to Rio. Rio has shown a little bit of strength. So it's gone the complete opposite direction to BHP. So I'd probably be more inclined to think about buying BHP if I had to choose between those 2 companies because of this little bit of weakness in BHP. And I think the market might be overreacting just a little bit. So iron ore looks good. Uranium has gone above $90. So let's have a look at the line chart for this. So iron ore starting to look a little bit better, has bounced off the long-term moving average channel. So looking a little bit better with uranium, but I don't own any. What am I doing? I don't own any uranium companies at the moment. None. Oil, low 80. Oh, oil has collapsed in the last week. I didn't realize that. There you go. And I am featuring an oil company in the list of 10 companies, Karoon. In fact, that will be the last company I look at. And that is one of the last charts I actually looked at earlier today. But yeah, oil has collapsed. And in related news, the oil price or the petrol prices at my local petrol station are all-time highs. Don't know why. I think it's something to do with margins. I have no idea. That's based off Ampol talking about their margins being decreasing or whatever. Why isn't everyone talking about oil or petrol prices? Why are they talking about supermarkets? Who cares about supermarkets? You're not going to save much money, whatever they decide upon, if they decide upon any. It's the problem with inflation is going to be petrol prices, because everyone relies on petrol prices, and there is a correlation between inflation and petrol prices. And if petrol prices remain at elevated levels, there's going to be problems with inflation over the next year or so. Anyway, so politicians pay more attention to petrol prices. Anyway, so hopefully this will lead to some decreases in petrol prices, but don't count on it. But yeah, it's weakening. I'm not sure. I don't really follow reasons why, that sort of thing, but looking really weak. And in the past week, oil is down 6.8%, the worst week since 29th of January, down 7.4%. Lithium, this is lithium futures, flat. Notice there was a little bit of a rally if you look at the line, there was a little bit of rally during the week. And so some lithium prices look good, but I'm pretty sure, and I'm going to call it, lithium prices have found a bottom. I'm going to call it right now. Lithium prices have found a bottom. I think now is the time to think about buying some lithium companies, particularly producers, on the pretext that those companies have also found a bottom. But again, there is a potential that lithium prices stay at these levels, even those companies might drop, because potentially there is expectations lithium prices will rise. And if lithium prices don't rise, those expectations will become wrong, and that could cause weakness in some of the lithium companies. All right, to one of my favorite commodities, copper. Copper has had a couple of weak days during the week, down 2.4% on Tuesday and another 1.3% on Thursday, but a nice little rebound on Friday, up 1.6%. But that's understandable, because if you just look at the overall trend, it's still up. And even during this trend, you can see there's been some down days and even a few down days in a row. A little dip here. In the week, down, actually not down, it was virtually flat. So even though we had 2 down days in the week, flat overall. So still bullish looking at this copper chart, still bullish on copper. And I think even coal, this is Newcastle coal. Newcastle coal is, this is actually starting to look interesting, isn't it? So coal's starting to look interesting. And what else? I'm going to look at some other commodities here. I do have it in my markets watch list. So nickel. In fact, we need a line chart for this. I was trying to find a nice chart or better chart for nickel. So nickel, a little bit of a correction during the week, it looks like a little bit of a correction. So that's probably why Metals X has went down, although Nickel Industries didn't, if I remember correctly. But this still looks pretty good. Could be just a little bit of a correction in the overall uptrend of nickel. Let's go back to candlesticks. What else? Silver should be looking pretty good. After this, no, not as good. A not possible dip. The reason I said it should be looking good, because I had a look at Adriatic Metals, which is a soon-to-be silver producer or current silver producer in Croatia or somewhere like that. And this chart looks pretty good. So I just assume silver looks pretty good as well. But not quite. Nice little correction in silver. A little pullback in silver, I should say. And what else do we have here? Natural gas. Nah. Quite a few lithium, but they're all you need line charts for them. And Nikkei, palladium. I always look at palladium for some reason. That looks still in a downtrend. Cocoa. Oh, a nice little rally, 9%, but it's just I look at cocoa just because it looks interesting. And tin. Wait there, Metals X is tin. I thought it was nickel. No, it's Metals X is tin. Nickel Industries is nickel. And I'm not sure why Metals X has dropped, because this looks pretty good. This chart looks pretty good. Metals X, here's Metals X chart. I'm pretty sure this is tin, isn't it? And it's pulled back. I think this is just a little bit of a pullback. And if tin prices keep on going up, then I think this share price of this company will rally from here. But a beautiful looking chart. Yeah, even though there has been a pullback, a beautiful looking chart for Metals X. And I am trading Metals X right now, by the way. I have bought in because of this pullback. And let's go back to my technical video. And that's it for commodities. So let's turn our attention to Bitcoin and the bonds. We'll start off with bonds. I always start off with Bitcoin. So let's start with the bonds. And this should be an uptrend. Been in a little bit of a dip. And I'm thinking probably this little bit of a dip on Friday was because of that weak employment, weak labor market. That's probably why we have seen a dip in the 30-year US government bond yield. But that does not mean the uptrend is now come to an end. Still a bit of an uptrend. And who knows what's going to happen in the next week in terms of announcements or reports, whatever. Here we go. Headlines for US 30. Stock jumps, yields drop as Fed cut hopes bloom. Speculator shorts on, and dollar drops as employers add fewer jobs than expected. It's all about the jobs. And even the Australian 10-year has dropped as well. So finally, let's have a look at Bitcoin, and maybe I'll look at Ethereum as well. Oh, a few good days there. Bitcoin has bounced, up 6.46% on Friday. There, go Bitcoin. Was it up for the week? Oh, that's a wonderful 1 week candlestick. You can, if you just focus on this 1 week, that tells me there's a lot of buying. There's been a lot of buying during the week in Bitcoin, particularly when it fell below 60,000, now above at 64,000, and you can just determine that by the candlestick. So there's a pretty big shadow below the main body. So that means the price of Bitcoin got below the main body, but a lot of buying during the week brought it back up to where it was. In fact, we've seen some pretty long shadows below the main body during the last month or so, which tells me there is a lot of buying in Bitcoin, or still a lot of buying in Bitcoin when it falls. So hopefully Bitcoin can rally. I'd like to see Bitcoin get above about $75,000. Will it? I don't know. It could. Oh yeah, so that's all I got. Actually, Ethereum. Let's have a look at Ethereum. Did it do the same thing? Not as strong as Bitcoin based off the weekly. Yeah, not as strong as Bitcoin. I still would definitely prefer Bitcoin over Ethereum. That's just me though. And then the chart. Oh, the chart looks a little bit better. Okay, so that's all I've got for indices, commodities, Bitcoin, and bonds. Now let's have a look at these 10 individual companies on the ASX whose charts look interesting for various reasons. Maybe not all good reasons, or maybe all interesting reasons. When I say interesting reasons, I'm just thinking there is a buying potential or trade potential. And doesn't mean the share price is an uptrend or the share price is broken out. It could be the share price is at a support level. Share price has fallen a significant amount, like BHP at a support level, and that does net itself to an interesting or potential trade. I've done that before, and a lot of times it's quite successful for some reason. Now I have to go to the right watch list. Here it is. Okay, so the first company we have is a company I do own. So this is looking like a possible breakout. Share price has moved into an uptrend. We'll call this a short-term uptrend because we have seen a higher high. Now, this high we saw back in the start of April was better than the highs we saw back in December. And now we've gone above that high after a little bit of a dip. So we have seen now at least 2 successive highs. And we've seen a lower or higher low as well. Not only that, share price right now at $75 is the highest it's been since July last year. And it's just gone above this highs we saw back in September. So yeah, so the market at this point in time likes mineral resources, but who knows why? I don't know why they like this company right now, but the market likes it. And the chart for mineral resources is looking the bullish it has looked for over a year. I'd say it would have looked pretty bullish back here in late 2022, and that bullishness came to an end, downtrend. Now it's back in the top trend. So even though I do own this, I am always open to trading companies I own for a few reasons. So I'm going to put this into my Bye Australia watch list, which are companies I follow more closely, intraday even. So chart for mineral resources looks pretty good. The next two companies I have taken a trading position in the past week for various reasons. First one is South32, a company I've traded in the past. Now, when I traded South32 in the past, it was a completely different setup. So let's go back to 2020. Here we go. And I've still got where I bought it. There it is. So this is just after the COVID-19 financial panic. Now, this was, if I had to rate this trade, particularly rate the buy, I would have given it a fairly low mark because I bought just before it looked like it was going to break out above $2.30. And then the share price just went sideways. So I bought in August. Share price went sideways for about 3 to 4 months. And what I should have done is just waited for it to break out. And it broke out on the 19th, or around about the 19th, 20th of November. So I maintained my position during this period where it just went sideways. But I was confident at that point it was eventually going to break out, but I just played it a little bit wrongly. I anticipated breakout before it happened. I sometimes do that, and it doesn't always work. And then the share price kept on going up. It was a beautiful trade, I have to admit. So I bought about $2, and I think it was $2.25. And I can't remember when I sold. I should put a note when I sold. So I would have held during this period, and I probably held until somewhere here when it started to get a little bit more, you can see it started to get a little bit more toppish. So it was a nice trade. I think I doubled my money in about, would have been under 2 years. And I'm always going to take that with a company like South32. Anyway, so this is a little bit of a different trade. We're not seeing this consolidation period, not seeing the share price trying to get above this level like we saw back in 2020, this breakout level. But share price of South32 was in this downtrend. Not a strong downtrend because the share price of South32 didn't really reach this level. Only really reached it once. But I was just waiting for this share price to break through this downtrend. It did a few weeks ago. And then we've seen some really good volume coming in the last week or so, particularly on Friday. There could be a reason why there was high volume coming on Friday, but the share price looks like it wants to rally. So this is me just thinking it wants to rally. Share price is at these highs. That's the other thing. So I could be getting ahead of myself just again, because if you just draw the line from these highs, the share price of South32 is right on that or just below it. So maybe this was again another case of me getting in ahead or anticipating a breakout, but I think it's already broken out. I think there is a shift in sentiment around this company and a change in trend in the share price for various reasons. And it's just, I think a lot of that is around the commodities this company mines. Manganese, I think. There's quite a few. Alumina, aluminium, coal, manganese, yeah. And all their mines are south of 32 latitude. That's why it's South32. Okay, so that's one trade I made during the week. I'm not sure how successful it's going to be. Another one is QUB. I've always thought of this company as being really overvalued, but I can't ignore this potential breakout. And it's on the back of some financial news, a profit upgrade, a true profit upgrade. Share price on Friday did open up higher and then pulled back. And on that pullback, I bought some shares on Friday. I could have waited the next few days just to see what the share price does. And if the share price pulled back to 340, that would be a nice little lower risk buy. But if the share price just went sideways, that's another good sign. There's not a lot of selling. So there's a little bit of selling on Friday, but not a lot. So this is a nice little trade, a breakout trade, exactly what I'm looking for. And even though I think this is expensive or possibly expensive company or overvalued company, I could be completely wrong. Anyway, there is research showing that value is deterministic on whether momentum trading works or uh, significantly beats the market or not. I think that's how it works. So if you use value considerations, you can do better in momentum trades or breakout trades like this. And I've always had that bias in myself. When I see a company breaking out, always in the back of my mind thinking, still it's breaking out, but the company looks really expensive. I don't know. But I'm way more comfortable when a company's share price is breaking out and I think there's value in that company. So that was one reason why I might not have bought some Cube Holding shares, is just because I think the company might be a little bit expensive. For example, the markup is the markup P ratio is like 33.6, dividend yield 2.4%. Not much growth, but this was a pretty good update from the company. So I can't ignore that. This logistics company. What I called it a supply chain logistics company. And I think the company describe themselves as an import and export logistics company. So the import export is the same as supply chain. Yeah. Oh yeah. On from company I bought to a company I sold, but not completely sold. Step one. Oh yeah. So this is me just trading step one. So I bought it at 53 cents, and there was actually no reason to sell. And sometimes I find myself looking for reasons to sell. So I keep saying this in respect to Service Stream. I'm really looking for a reason to sell Service Stream. It's up, was it 50% from when I bought? I bought a fair few, so my holding in this company is getting quite big. And I'm just waiting for a reason to sell. But it's just not giving me any reason at all, particularly when I broke out on positive financial results in August. Share price keeps on rallying. Not rallying heaps, but it keeps on increasing. So my sell point for Service Stream is $1.20. If I see it fall below $1.20, automatic sell. I had the same thing with step one. I liked the chart, but I was seeing a little bit of weakness, come in. Share price was really struggling to get above $1.87. You can see it. Try to get above that level 1, 2, 3, 4, 5, 6 days and did not. And then it fell back. Now, I put in $1.60 as an important level for me for various reasons. And the first reason was it bounced off it back in early April and then went back up to $1.88. And then I was just following the share price performance of step one, looking at the chart, and just really weak leading up to the break. And the breakout, negative term. So breakout in my way is when share price goes above a resistance level or goes below a support level. And this happened on Tuesday, 30th of April. Share price closed on this day at $1.58 after being as low as $1.54. And I just found a lot of weakness in the chart, and particularly if you look at shorter term charts. So this is the hourly chart. So it's actually looking really strong. So if you look at the hourly chart for step one, it was in a beautiful 1 hourly uptrend from when I bought, even before when I bought. And then we started to see weaknesses. And then just before I sold, just before I broke down below that support level, you can see even the hourly chart looked pretty weak. And then I sold on open on Wednesday. Was it Wednesday or Tuesday? It would have been on open on Wednesday. Yeah, because I sold $1.55 on open, and in that first hour, it fell to $1.45, and that's continued to fall. Really big volume coming in. Look at that volume. This is the 1 hourly chart, by the way. So some really big volume coming in when the share price fell on that day. So maybe there was other traders like me who saw this as a really negative thing. Now, the share price has gone sideways the last 2 days, over about like 10 hours or so. Continued good volume coming in. You just see the moving average volume just rising. So does that mean a good thing or bad thing? I don't know. Will we see some value investors maybe coming in? P ratio 24.7, growing company? I don't know. But it's just the chart. Just play the chart. And I just saw weakness. But being the type of person I am, I did not sell completely. I sold 2/3 and kept 1/3. So that 1/3 is going to be a long-term play. But I decided to trade the other 2/3. And you can just see the 1 day volume pretty big volume coming on that day where I sold. That was sort of the confirmation. And if you do look at the daily chart, it's moving and has bounced off the longer term moving average channel. So that could be the long term investors coming in, seeing maybe some value. Anyway, so still have a small position in step one, and I'll maintain that position probably for a while unless I see some problems with the overall business of the company. Now, a company I also was trading was Duratec, but I bought this company back here, 55.5 cents on a breakout. So it was a little bit after the breakout. The true breakout happened on the 7th of November, and I bought the 22 weeks later. So I could have bought at 48 cents or 50 cents. I bought at 55.5 cents. And it was a good breakout. But when I bought, so I wasn't in the red or green until about a month after I bought. So I bought on the 18th or 19th of November. And 1 month later, the share price was down. Share price was at 50 cents or so. So it took a while for this trade to play out, and then a beautiful chart. And then I started seeing weaknesses sort of back in, was that a year later? Not quite a year later. Share price rallied after I saw some weaknesses, but definitely you see some weaknesses. The reason I saw some weaknesses here, you can see the share price was in a well-defined uptrend. There was no reason to even think about selling during this point. Look at it. It's beautiful. Uptrend. Whenever the share price fell into the short-term moving average channel, it kept on going up. It pulled higher. And that came to an end in September of 2023. Found some support at $1.08. And that support level was really important. We can see it's bouncing off that level 1, 2, 3, 4 times. It bounced off it again here. And on this time, it bounced off it here. I bought some shares, short-term trading position, bought $1.08, and I sold at, I think I bought $1.10 or 11 cents, and then I sold at $1.20. So a 10% gain in a fairly short period of time. That trade works well. Buying off when it bounces, the company share price bounces off support level. It's worked pretty well in my past, but the main thing is don't hold for too long. Just play the bounce. And then I sold. Share price actually went further from when I sold, but that always happens as well. So I sold about $1.21, so it would have been 10%. So bought $1.10, sold $1.21. Share price went to as high as $1.25, but then look what happened. Share price went back to $1.08, and on the 23rd of April, share price fell straight through it on a volume. Look at the volume coming in when it broke through that support level. That is telling me there's some people who knew $1.08 was a very important level for Duratec, and when it fell below that, they sold. And so there was a bit of selling pressure at that point in time. I still think there is potential value in this company, and I think that alone could help this company or help the floor in the share price of this company. Will maintain a floor in the share price of this company. For a story stock, that floor could be 0 cents. For Duratec, it's not 0 cents. There is a floor, and potentially $1. So it's remained above $1 during the week. That could be a good sign because, again, $1 is an important psychological level for most investors, or probably the best way to say it is for the investing community. I don't care about round numbers, but overall the market does. So $1 is an important level for Duratec. And as I mentioned, value, P ratio is 11.1. Now, in hindsight, you've got to look at all the valuation metrics. There could be reasons why it's 11.1. Dividend yield of 4.4%. Market cap is 255 million. This company has seen a nice growth in revenue over the past 5 years. Nice growth in revenue. But I think the problem was the margins. Some of the margins fell in the last half year. So that could be a reason why there's a bit of weakness in the share price. And overall, the daily chart looks pretty weak right now. This has moved into a downtrend. But how long that downtrend has to play out, I just don't know. This could be it. $1 could be the low. Okay, a company I didn't buy, but I'm thinking about it, is Amcor. I would not consider this company a high-quality company, a packaging company. And I think this is a global packaging company. And just by looking at some of the numbers here, it says P/E ratio is 22, which would be way too high for this company, but dividend yield of 5.1%. They released results, and the results were looked upon favorably with the market. So I did feature this company. I think this company could have been one of my stocks of the week or stocks of the day, but it's just how the market has responded. So they released their results on Wednesday. Share price on that day rallied 4.6%, but that was not the breakout because the share price, you can see that comparison. On that day, the share price closed at $14.45. And the share price was higher than that over the last 5 or 6 months. But then the next day, on Thursday, share price rose another 4.15%. And then on Friday, share price rose another 0.5%. And that's promising that we have not seen a lot of selling on pretty good volume coming in the last 3 trading days. This could be a really good breakout. And the last time we saw the share price get to these levels was back on the 7th of February. That must have been results. Share price on that day rose to a high of $15. Share price now $15.12. So share price now is higher than that. And the last time the share price was $15.12 was way back in September. So it's not that long ago, but more than 6 months ago. And that's what I'm looking for. Positive financial news, higher volume, share price at least a 6-month high. And now it's at a 7-month high. So I'm not sure why I didn't buy any shares in this. Not sure, because this is exactly what I'm looking for. Again, it might just be my biases around the company. I don't think this is a high quality company. I don't think this company would grow all that much. And if P/E ratio of 22 is right, it's expensive. It is growing a little bit. It has shown growth. Really low margins though. And let's have a look at this has quality numbers in it. Oh, that's right, because it's listed here, but it reports in American dollars. So I think it's dual listing. It would have dual listing. Yeah, just looking at the last 5 quarters, yeah, nothing to get too excited. And I just think maybe the reason the market's excited because the numbers beat expectations, because on the surface, the numbers look pretty weak. Okay, so that's Amcor, possible trade. I have been thinking about it. But if the share price just goes sideways from here, I could have another 2 weeks thinking about it, and the share price might not move up more. If the share price keeps on increasing, that would be that would be less of a reason to buy. Okay, Avita Medical. Why do I have this company on the list? So this is the company I do follow. I do like the potential of Avita Medical. The one thing that turns me away from this company, from even holding it for the long term, is just the volatility. Even the valuation, Mark have a 343, but a lot of volatility in this company. You can just see that by this daily chart. And again, I have to auto fit. There we go. But yeah, so they released on the 11th of April something negative. The market absolutely hated it. Fell 12% on this day and just kept on falling. Look at that. Just kept on falling. I think it is now oversold. And we can confirm that by looking at RSI. Relative Strength Index. Yeah, it's been oversold for 2 weeks. And I wouldn't be surprised to see, the last time it was oversold was back in October last year, and then it bounced really nicely. So this is a potential bounce play. And I do think the selling is coming to an end, decreasing volume, selling is coming to an end, and the share price the last 6 days sort of going sideways. In fact, the last week, we do have to look at the weekly chart. In fact, the last week, share price is flat. In fact, the share price up a little bit, but it is a doji candle because it goes from the start of Monday to the end of Friday. So the open, and which would have been up a little bit from the close on Friday. That's why it's up a little bit, even though the doji or the candlestick looks flat. And this just shows me, more than likely, selling and buying is equal. Or the bears and the bulls are equal in contest. The bears aren't winning, the bulls aren't winning. But that's after 2 big down weeks in a row. In fact, if you look at the RSI for the weekly chart, you probably see it's massively oversold. That's what I'm thinking. Oh, not quite. Yeah, look at that. I wonder if I've never looked at the RSI on a weekly chart. So when Avita Medical was oversold, was back in June 2022, and that rallied. And when it's overbought, it didn't fall though. So RSI is not perfect, but and to be honest with you, you can always tell whether a company's oversold or overbought just by how quick it's fallen, and just by seeing how quick Avita has fallen. It's been oversold, and I would expect a bounce. So definitely Avita has potential bounce play here, and even the bounce could be quite severe. I would be surprised to see a 50% bounce from here. 50% bounce? Yeah, 50% bounce, because that would mean the share price would get back up to $4. And $4 was on the day they released this negative news. Share price closed on that day around $4. So 50% bounce from here, I could see happening. which is attractive, to be honest with you. Okay, successful trades. So all potential uptrends don't come to fruition. They can tease and then disappoint. Treasury wines is an instance like, or an occasion of that. So I actually did buy a trading parcel in Treasury wines. So this would have been, I forget exactly when. I should have left when I bought here. It would have been on this breakout. It would have been maybe here, somewhere here. It looked really good. So if I just cut out there we go. It was looking really good. If you just, if you look at the chart there, it looks pretty good. This chart is starting to look good. Share price was at least 6-month high. Can't remember why the share price was running. It was running for some reason, some good volume coming in. And I thought, yeah, let's take a trading position in this company. But with all trading positions, I have a scenario where I'm going to sell. So a worst case scenario when the trade does not go in my favor. And then for some reason, there was a massive sell-off in Treasury wines. It was like 6 down days in a row. And that was just my sell point. So I sold when it fell below about $12 or so. I forget when I sold. And for some reason, there was a little bounce and share prices kept on falling. I don't know why. Who knows? Whole point is just look at the chart. At this point in time, the market is really bearish on Treasury wine, particularly. I don't know why. It's bearish. It's turned bearish suddenly. There must be some reason, not big volume coming in. Now, on the flip side, this was one of those occasions where it looks like the market was turning against me in my particular trade. But on the flip side, sometimes I sell and maybe I shouldn't have. And A2 milk was an occasion. So bought at 5.45, and I had my sell price at about 5.75. Then it fell through 5.75, and I thought I'll just sell. It fell through it. I'll lock in some profits, not big profits, and then the share price has rallied since then. But even though it's rallied, I look at this chart and I don't see too much strength in the shorter term right now with A2 milk. So it's all about managing your risk and preserving your capital. So when a trade goes against you, cut your losses. Might be a small loss, but cut your losses. You don't want small losses turn into big losses. That's the main thing around this trading philosophy. Make profits. What's my trading philosophy? What's my number one rule? Don't lose money. The best way you don't lose money is you limit your losses and ride your winners. But sometimes you need patience. And what I mean by that is, what's a good example? Well, South32, what I showed you before. No, what was that company where it took a month before I was in profit? That was Duratec. It took a month before I was in profit. And then I was being patient, didn't want to sell too quickly. And then I rode the Duratec train and doubled my money in a fairly short period of time. Less than a year anyway. Okay. Onto a chart that looks really interesting is Bega. So, yeah, this chart looks pretty good. Definitely an uptrend. And the share price in the last 2 trading days has rallied up 5% on Thursday and a further 2.5% on Friday. I don't remember this company releasing any news. So this is on just sentiment right now. No news. I don't know why anyone would be excited buying cheese and Vegemite. What's the catalyst for that? I have no idea. But the market is interested. This company has released no announcements in the last month. And the last announcement a company did release was change of directors notice. So maybe some directors were buying. And the last price-sensitive announcement was February in regards to the half-year results. So how have the directors been buying? Let's have a look. Yes, so Relaine Margaret Murphy bought $448 worth of shares. That's insignificant, in my opinion. But they all bought shares. There could be a reason why they all bought shares. Maybe it's like options vesting or something stupid like that. Here we go. Issue of shares via participation in the BGA dividend reinvestment plan. Okay, it's dividend reinvestment plan. So they didn't actually go on market and buy shares. It's just they got shares because that's what they want to do. They reinvest their dividends. Okay, that makes more sense. Okay, so I have no idea why Bega share price is rallying. When you have a look at the valuation, I would say this company has no PE ratio because it was loss making, I suppose. But if we go back, have a look at the annual data. So lost in the last calendar year or financial year, $24 million of profit in 2022, $78 million of profit in 2021, $21 million of profit in 2020, $4 million of profit in 2019. So this company exists on really low margins, but the market likes this company for some reason right now. So this is a daily chart. So let's have a look at the weekly chart just to see if there's anything interesting here. So this just shows me it's not that high of a quality company. A lot of weakness in the share price. Share price high goes all the way back to 2016. And there's a pretty obvious top there, resistance level at $8. So it could actually double right now and get to those levels. But this chart looks, this chart, weekly chart, is just a short term. So at this point in time, I have no motive, no reason to buy this company right now. I don't know why it's rallying. I'm missing something. But just because I wouldn't buy it doesn't mean you don't have to. Maybe you love Bega Cheese and love this company. Okay, and the last company is Karoon Energy. Share price of this company has collapsed. And look at that. They say technical analysis doesn't work. There was an obvious support level or resistance level of this company at $2.40. It actually broke through it for a brief period between August and November last year. But that's still, that level, 240 still is an important level. Just because it broke through, it doesn't mean it just stops being an important level, because then it broke down and look what it did in April. It got to 240 and then collapsed. It might have collapsed for a reason, but it collapsed. So I don't care about that. What I care is where it's collapsed to. So about $1.90. And $1.90 is a really important level for this company. It briefly, share price briefly fell below $1.90, but then went above again. In fact, you could put this a little bit lower, say $1.84, and you can see the share price of Karoon bounce off $1.84 1, 2, 3, 4, 5, 6 times in the past few months. That's the only reason I'm interested in Karoon Energy right now, is just where the share price is. And it looks like it's just bounced over on a Thursday trading session. All right, so I think that's all I got for this particular video. The plan moving forward for this particular channel is I am going to be releasing a top 25 Appendix 4C and 5B for the March quarter. And what I might do is I'll give you those top 25 companies and then do standalone videos on all 25 companies. I've already done one on one, that's side dev. So I do or have numbered these 25 companies. I was going to do a top 10 and I couldn't whittle down to top 10. I suppose I did in the end because I've ranked them all. If I did that, SiteMinder would have come in at number 10 and Brookside Energy would have just missed out, coming in at number 11. So look out for that video. I'm not sure when I'll release it. And then I'll also still planning to do a standalone video on Mayfield Group. Hopefully, I was going to release that tomorrow morning, but that means I have to record that video this evening, but I'm not sure I will do that. Otherwise, that's all for this particular video. And the last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.